Yo guys, it's John here with Option Lab, and yes, you read the title right. Almost 150K profit this week on one stock. We're going to cover how I found this trade, how I executed it, and how you can execute it in your own account. So before we hop into the whiteboard, I am going to pop up my live account on the screen here so that I don't get any trolls in the comments saying this is fake. But anyway, let's hop into the whiteboard here and break down this exact trade. It was only 5 clicks of my mouse, and that was 150K in 1 week. So this is a pretty rare opportunity, but the principles are still going to be the same for how you can find these trades in the future. So we're back on the whiteboard here, and as you can see here, 146K in 1 week. And if you haven't noticed by now, the stock that I did it on was the ticker CAR, which is Avis Car Rentals. But I put in a little snippet here of the actual trade. So let's go through those first, and then I'm going to show you the actual steps to entering the trade. It's going to be 5 easy steps, and I'm going to show you guys how to implement it on any account size. So first, let's go. These were actually the first 2 trades I took. And as you can see here, guys, what I did was I sold to open short calls or naked calls on CAR extremely far out of the money, right? So 1140, the stock was around 700-800 at this time, and I sold to open the 1140 calls. And as you can see here, I was doing these in lots of 3, 10, 10, 20, and 40. And the premiums are just massive, right? 38,000, 10,000, 15,000, 21,000, 59,000. Now, what does it actually mean to sell to open a call? If you're not familiar, this is basically if the stock is going like this and it's way up, we sell to open a call right here, and for doing so, collect a premium. And as long as that stock stays below our strike price by expiration, we keep this premium. Simple enough. If you're not familiar with these things and you want a cheat sheet, you guys can actually go to my website, theoptionlab.com. In the description, download my cheat sheet. Just hit yes, I want access now. Fill out application, and if you want help actually implementing these strategies into your own account, you can book a one-on-one call with me live. So anyway, let's go through the steps of how to actually enter this trade, and so you guys have kind of a good idea of how to do this. So step 1 is we're going to scan for high IV stocks with recent large or outlier moves. So if you were following the market this week, you know that CAR or Avis had just this historic rise up kind of out of nowhere. It had a sort of meme stock behavior to it where the move really wasn't supported by fundamentals. It was sort of just a bit of a hype train, and that is prime criteria for me to think, well, since the stock is moving a ton, there's a ton of volume and volatility. Implied volatility is going to be high, and when implied volatility is high, we have higher option premium. And like I said earlier, when you sell to open a call, you receive a premium. So when IV is high, I'm receiving more money for opening that trade. So step 3 is going to be sell to open calls and or puts. And notice here I wrote against the direction. So as CAR was skyrocketing up, and I'll just draw it here. So say this is CAR, it's just skyrocketing up. I'm actually selling to open calls above where that stock already is. So technically, to sell to open a call is a bearish trade. So I'm betting that CAR is going to make a pullback in the down direction. So I'm choosing, that was the eraser. I'm going to choose a low delta, so under 0.1. This means that there's a 90+% chance that by expiration, CAR stays below my strike price. And I just collect the premium, don't have to do anything. Usually I'm doing 7 to 14 days till expiration. This is so that I can minimize the time that I'm exposed to such a volatile name like Avis. So in this case, I have a really, really far out of the money strike and a very short expiration. Now, the alternative, and what we'll go through this after, is a credit spread, because I know a bunch of you guys who don't have hundreds of thousands or millions in your account are going to say, well, how in the F do I sell to open this many calls if my account's not huge? So this is actually kind of risky. Now, the people in the comments are going to say this is very risky and I'm going to blow my account and all this BS, but I am going to promote a little bit of a safer method here. to come. So let's just go over on a chart what this actually looks like. By the way, if you guys are interested in booking a call with me one-on-one, and I can actually show you one-on-one how to implement these strategies to fit your account size, you can go to the Option Lab. I helped over 300 people. We have over 300 people in our community, a ton of good reviews. You can book a call right there. But let's actually go to the stock. So this is, I believe this was like a 60-day chart, I think, that I took off the internet. But we're looking at ticker CAR, and we can notice here there's just an absolutely parabolic move upwards, followed by this colossal crash. So what I'm doing here is I'm looking for, if we follow our steps, step one, I'm scanning for these stocks. Again, in my community, we have all types of scanners. I have a Bloomberg terminal that scans for these types of opportunities, but CAR made this outlier move. And what I'm doing is I'm noticing this huge move up. And what I'm doing is I'm selling very far out of the money calls. And for doing so, receiving a premium. Now, if you notice right here, this is the stock is at 700. I was selling to open the 1140 calls. That's over 400 points out of the money, guys. So think about that. The stock would have to move up 400 points before I get in trouble. Now, let's just say it did blast up through 1140 by expiration. What would happen is I would end up short the stock at the strike price, but I would still keep the premium that I received for selling to open those calls. What ended up happening is a few days after, CAR just absolutely crashed all the way back to, its pre-spike levels. And these calls that I sold, all of these, right, all this premium, all those options expired worthless. And since I was the option seller, I kept all that premium that I got for entering those trades. So that's kind of the basic gist of what happened. Now, let me actually go over quickly an alternative if you don't have a massive account that you can make this work with using the same principles. So this is going to be what's called a bear call spread. And let me just change this to white. Now, I have a ton of other videos. I also have a 30 video course, over 30 hours of content in my course that's going to explain this very in depth, but for the sake of brevity, I'll just be quick with it here. So say we have our stock, say this is CAR, and say the stock is around 700. So what I was doing is I was selling super far out of the money calls at 1140. So it's like minus 10 of the 1140 calls, right? And for doing so, I was receiving a premium. Now what you could do is turn this into a protected trade rather than, a naked call. And how to do this would be to buy calls above this strike. So plus 10 of, say, the 11, actually, I think 1140 was the highest strike price you could do. So let's just say for this example, there was an 1160 call. For doing this, you'd have to pay out a debit, right? So you'd pay a debit, but since this 1140 call is closer to the money, there's going to be higher option premium. So you're going to receive a net credit because, this money you're getting is bigger than the money you're paying out. The beauty of this is even if it skyrockets through 1160, these are going to cancel each other out and you're going to have a fixed loss rather than an unlimited loss if you were to just have your naked call. So obviously you're not going to make as much because you're having to buy, you're going to have to pay out a debit to get this protection, but this is going to work on nearly any account size, and it's worked with hundreds of people that I work with on a day-to-day basis who want to enter these types of trades but not have this unlimited risk situation. But that's the basis of kind of what I did. And let me know in the comments if you guys were in this trade, and let me know what you guys think of these steps. And if you have any other tickers or names that you like to trade this method on, if you are interested in booking a call with me one-on-one, you can click the link in the description. I will be there for a one-on-one call with you to help implement these strategies into your account. Anyway, I'll see you guys in the next one. Peace.